Alright guys, looks like the recession fear is fading away from US because just yesterday at 10:30 p.m. in Australia time, Sydney time more specifically, we had the release from the CPI from US. And I do have some interesting figures to show and to point for everyone here, because at the same time it's fading away, it's not. And it's the same time it's fading away the sort of market pricing for more cuts. It's still very sticky. So let's break these through, but don't forget to subscribe and thumbs up on this video. And don't forget as well to join me on the Telegram, because that's where I post every single day. So just today I've posted this type of content right here. You can see it. That you know, it's just simple insights, but it matters a lot for things, you know, for traders that are starting, or for traders that are a little bit stuck and, you know, break even, they make some money, get back some money. So let's be real, let's be data driven here, and that's what I always try to contextualize into those Telegram posts I do. All right, so yesterday we had the CPI, the core CPI, month over month and year over year for USA. It all came in much better than expected, but higher than the previous, okay? So the month over month came in at 0.2% from the previous of 0.3%, sorry, from the consensus of 0.3%, and the previous of negative 0.1%. So basically inflation rose, but below the consensus what everyone was expecting. That's in some instance good. That's why we saw, you know, risk off currencies sort of performing a little bit better yesterday, like risk on currencies performing a little bit better yesterday, like Australian dollar, New Zealand dollar, CHF as well, Canadian dollar, those types of currencies. We had the core CPI as well, month over month, came in below what the consensus was expecting of 0.3, came in at 0.2, but above the previous of 0.1. So the core CPI is still showing for me that the, you know, even if we exclude energy and food prices, we still have a higher inflation. Then the CPI year over year came in at 2.3% from the consensus of 2.4, better than expected, but again a little bit better than the previous of 2.4 to 2.3, so 0.1% difference. And the core CPI year over year came in exactly the same from previous consensus and actual, so 2.8. So nothing changes into the core CPI for year over year. Well, if we just break down a few numbers here, I have the table. I will actually ask Dave to put this table up here so everyone can follow through with me. Basically, what you guys looking at is the CPI from the data from US Bureau of Labor for Statistics, and we can see the table is the, you know, all items and then all items less food and energy. So if we look at the shelter, all right, so it's the third line from the bottom to the top. If we look to shelter, we can see there is a big increase from 0.2 to 0.3, and that this is one of the biggest accountings at 4% in total for the whole all items less food and energy. If we look for the all items, you know, first section where it says energy services, so if you look at there, we can see there is a little bit of a decrease into that number. It's still pretty good, but, you know, not enough to show to me that if we even if we exclude energy, we still have a higher inflation. Okay, so it's still very very high in my opinion. Well, what I have to say is, with that, there's a lot of stickiness into the price. We moved back, but we didn't move any further back. We just literally one step back, and this is what we've been doing. If we look back, you know, we've been one step back, 3 steps forward, one step back, 2 steps forward, one step back, 1 step forward, and then all the way it repeats, 2 steps back, 2 steps forward. So inflation is not going anywhere pretty much, okay? That's the whole point of this. And the reason is because consumption is still very high, retail is still selling, so therefore people still buy. Credit lines are still very, very high, you know, and that's how inflation will continue to be very sticky. Very, very sticky inflation means that the Fed will hold for longer at higher rates. So even if we look to the CME Fed Watch 2, it's only specifying only 2 cuts for this year, only 225, so basically 50 base points. Well, surprise, not much, because if you've been following me, I'll say 75 base points, where all the big ones are saying 150, 125. Stick to the simple. Inflation is sticky. Fed can't control. Look at Jerome Powell's face when he's, answering questions. He's like scratching his head, like, next question. I mean, come on, simple, easy. Stick inflation. That's it. US dollar most likely had that rebound, but will continue to go up. So euro dollar maybe go down. Aussie dollar maybe go down. It depends about the Aussie dollar, just because there's a lot of risk in the market at the moment, after the trade deal that we had with China over the weekend. So I would say, if you want to trade the US dollar longs, I would prefer to go like for US dollar Japanese yen longs, maybe US dollar CAD longs, US dollar CHF longs. Try to short the safe havens and try to long the risk on currencies like Aussie, New Zealand, those types of things. And then try to short the Canadian dollar, the Australian, the New Zealand, the CHF, the Japanese yen, that type of currencies, and even gold, because the risk is on, and the market will continue to be risk on for quite a while. And Trump is your friend, man. Trump is your friend. He's been doing such of those things, pull it back, buy, short, sell, and then that's it. It has been pretty simple, I would say, to trade on those scenarios. It's not simple if you're not looking at the data, if you're not putting all the context together. Okay, so I think I've said everything. I hope you guys could understand. But if you have any questions, just don't forget that tonight, this afternoon, I always get wrong, this afternoon, 4 to 5 p.m. in Sydney time, I will be exploring a few trades. So if you want to explore a few trades with me, if you want to trade, we'll be marking down entry, TP, and exit on the chart. Come with me, and we will be, analyzing the sentiment tool. That's a secret sentiment tool I use to see where the majority is positioned, and I trade against them. So if you are interested, come to me tonight, this afternoon. It's free. We don't charge anything. The only way to get the link is to join the Telegram. So if you join the Telegram now, the link is on the description. It's free as well. 4 p.m. right at 4 p.m. Sydney time, you will get the link, and then you can join. All right, guys, thank you so much. I won't be here tomorrow, and I won't be here on Friday as well on Monday, but thank you for all the support you guys have been giving to us. And if you have any questions, again, bring to me this afternoon, or put down in the comments, or we'll make some time to answer. Have a great rest of the week, and a good weekend as well. Cheers. Bye-bye.